Welcome to today's market analysis for September 25th, 2025. Get ready for a deep dive into the most impactful candlestick signals shaping our financial landscape. From tech's bullish surge to energy's bearish pressure, we're uncovering the patterns that matter most. So fasten your seatbelts as we navigate through today's market movements and uncover the hidden messages in the charts. Our market snapshot reveals a day of contrasts, with technology and communication services pushing higher, while industrials and energy struggled to keep pace. The S&P 500 index closed up 0.8% at 6,604, driven primarily by strong performances in the tech sector. Today's market was predominantly analyzed using daily candlestick charts, which provided crucial insights into sentiment shifts and price reversals. Let's break down the most frequent patterns we observed across the market. Doji and near doji formations were prevalent, with 533 stocks signaling market indecision. These candlesticks, characterized by almost equal open and close prices, formed small bodies with long upper and lower shadows. This pattern suggests a tug-of-war between buyers and sellers, with neither gaining significant ground. The hanging man pattern emerged in 714 stocks, indicating bearish sentiment amidst uptrends. This formation is recognized by a small body at the top of the candle, with a long lower shadow, typically twice the length of the body. It signals that sellers were able to push prices significantly lower during the day, but buyers managed to push it back up by the close. Bearish engulfing patterns were observed in 147 stocks, signaling potential reversals at sector highs. This to-candle pattern forms when a small bullish candle is followed by a larger bearish candle that completely engulfs the previous day's body, suggesting a shift from bullish to bearish sentiment. On the flip side, bullish engulfing patterns appeared in 137 stocks, forecasting positive reversals from recent bottoms. This pattern is the opposite of its bearish counterpart, with a small bearish candle followed by a larger bullish one that engulfs the previous day's body, indicating a potential trend reversal to the upside. Now let's delve into the technical interpretation of these patterns. The high counts of bearish engulfing and hanging man formations suggest increased caution, especially in sectors that may be overvalued. However, it's not all doom and gloom. The technology and communications sectors showed more bullish engulfing signals, indicating that buyers are regaining control after recent consolidation periods. The abundance of doji patterns reflects an indecisive market psychology, with traders seemingly awaiting clear direction. This indecision was particularly evident during the midday trading session, between 11:30 a.m. and 1:30 p.m. Eastern Standard Time, when many stocks traded in narrow ranges. Moving on to sector and industry highlights, we primarily use daily candlestick charts for our analysis, with frequent use of 4-hour and 1-hour charts to confirm intraday reversals in key sectors. The technology sector led the charge today, posting an impressive gain of 2.3% and adding $178 billion to its market capitalization. Software and IT services were the main contributors, with increases of around 2.5% each. The sector formed a strong bullish engulfing pattern on the daily chart, suggesting that the current uptrend is likely to continue. This pattern formed when today's bullish candle completely engulfed yesterday's bearish candle, indicating a decisive shift in sentiment. The technology sector reached its daily high of $2.45 trillion in market cap at 3:45 p.m. Eastern Standard Time. Communication services followed closely behind, with a 1.8% increase and a market capitalization change of $62 billion. The telecom industry, valued at over $800 billion, led the sector's gains. A bullish engulfing pattern also emerged here, forming in the last 2 hours of trading and closing near the day's highs at 4 p.m. Eastern Standard Time. The healthcare sector presented a more neutral picture, with a doji pattern forming on its daily chart. This sector saw a modest 0.5% increase, translating to a $17 billion rise in market cap. The pharmaceutical industry, valued at approximately $350 billion, showed the most stability within the sector. The doji pattern, with its small body and long upper and lower shadows, suggests that buyers and sellers reached equilibrium, leaving the market direction uncertain. Industrials faced headwinds today, with the sector declining by 1.2% and losing $62 billion in market value. Conglomerates representing about $520 billion of the sector's capitalization were particularly hard hit. Multiple hanging man and bearish engulfing patterns appeared on both daily and one-hour charts, signaling potential further downside. The sector hit its low for the day at 10:15 a.m. Eastern Standard Time, struggling to recover throughout the session. The energy sector also experienced pressure, dropping 1.5% and shedding $90 billion in market cap. Oil and gas companies, comprising roughly $600 billion of the sector's value, led the decline. Hanging man patterns were prevalent on the daily charts of many energy stocks, forming during the morning session and persisting through the close. The sector reached its daily low at 11:30 a.m. Eastern Standard Time, with only marginal recovery in the afternoon. Let's summarize our findings in a comprehensive sentiment and outlook analysis. Bullish sentiment is strongest in the technology and communications sectors, supported by the highest counts of positive reversal patterns on large-cap charts. The software industry, with over $2 trillion in market cap, shows particular strength. Meanwhile, energy and industrials remain under pressure, highlighted by abundant bearish candlestick signals and undervaluation in core mid to large-cap segments. To provide a clear overview, here's a summary of our sector analysis. The technology sector displayed 5 bullish patterns and 2 bearish patterns, with an overvalued status. The most frequent pattern was the bullish engulfing, primarily observed on daily charts. Communication services showed 4 bullish patterns and 1 bearish pattern, also considered overvalued. Bullish engulfing patterns were most common, appearing on both daily and 4-hour charts. Healthcare exhibited to bullish and to bearish patterns, with an undervalued status. Doji patterns dominated, mainly on daily charts. Hanging man and bearish engulfing patterns were most frequent, visible on 1-hour and daily charts. Lastly, the energy sector showed 2 bullish patterns and 4 bearish patterns, currently undervalued. Hanging man formations were the most prevalent, primarily on daily charts. In conclusion, September 25, 2025, paints a picture of a market led by technology's bullish reversal signals and weighed down by bearish formations in industrials and energy. Large-cap tech remains overvalued, but shows robust buying signals, while undervalued opportunities persist in healthcare and energy, as revealed by high counts of bearish candlestick structures. Today's analysis empowers traders and investors with actionable data on key market turning points and sector rotation opportunities. By closely monitoring these candlestick patterns and understanding their implications, market participants can make more informed decisions in this dynamic financial landscape. Remember, while technical analysis provides valuable insights, it's crucial to combine these observations with fundamental analysis and broader market context for a comprehensive investment strategy. Stay tuned for our next market update, where we'll continue to unravel the complex tapestry of market movements through the lens of candlestick analysis. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.